Okay, so we last left off with the information required to begin preparing our cash budget. So we're now ready to look at the actual presentation and format of what's known as a cash budget. We begin with our sales collection. What we're showing here would be the amount of money we expect to receive each quarter based upon sales. And again, this information is coming from our sales budget. The account receivable, they said, well, that was owed to us from last year will be collected in the first quarter of the 2017 year. When it comes to our sales, we're going to collect again. We expect to collect 6% of our sales in the first quarter, and 40% of our sales will be collected in the second quarter. So this amount here has been broken down into 2 quarters. We're going to continue that for sales for the second quarter, sales for the third quarter, and then for our fourth quarter sales, we're only showing the amount we expect to collect in the fourth quarter, which would be the 60%. The other 40% will be collected in the upcoming year. So you're going to add the amount of cash we expect to receive each quarter, in this case from sales and also from our account receivable. For our payables, the accounts payable is showing what was owed at the beginning of 2017. That amount we said would be paid in the first quarter of 2017. For our purchases, we're going to pay half of the amount, or 50%, in a quarter they were purchased. The other half would be paid in the following quarter. So for each of our purchases, this comes from our purchase budget, we'll pay half the amount in the quarter purchase and the other half in the upcoming quarter. So this is showing the actual payments we're going to make for the purchase made each quarter. And again, for our fourth quarter purchase, we'll pay half in the fourth quarter of this year. The other half will not be paid until the first quarter of the upcoming year. So now this is showing the actual payments we're going to make each quarter for the material that was purchased. And we're also going to pay this $10,600 was what we owed last year from our material purchase. Okay, so I know this number is a little bit small. This is showing our beginning cash balance. This is showing the amount of cash we expect to collect in the first quarter. If you recall, they also indicated that we're going to sell investments in the first quarter for $2,000. So when you add it all together, this shows the total cash available. Then we're going to show the actual disbursement for material costs, labor costs, overhead, sale, and admin expenses. Notice that these are referring to the actual budgets that this information is coming from, or the line items. There are going to be some explanations of that. This is showing the income tax expense. This is showing our total disbursements we expect for the first quarter of 2017. Notice that the available cash exceeds our disbursements. Therefore, we will have an excess at the end of the first quarter of $25,500. No need to borrow any money. So our ending cash balance would be $25,500 at the end of the first quarter. Of course, the ending balance becomes beginning balance for the second quarter. Here we're showing the cash coming in. Here we're showing the cash going out. So if I take my beginning cash balance along with what's coming in to get total available, that number is $223,500. Total disbursements is $211,500. That give me an excess of $12,000. Now remember that our desired cash balance will be $15,000. So we're $3,000 short. So in the second quarter, we're going to borrow $3,000 in order to get our desired ending cash balance in the amount of $15,000. So that $15,000 becomes my beginning balance for the third quarter. This is showing my cash receipts. Total cash available be $243,000. These are showing all of my cash disbursements. They total $225,000. Therefore, it would give me an excess of $22,500. Because I have an excess, I can now pay back the $3,000 I borrowed in the last quarter, and they were told to assume that interest will be paid in the amount of $100. So I'm going to add in the actual amount of the interest. So now my ending cash balance will be $19,400 at the end of the third quarter. So my third quarter ending balance becomes my fourth quarter beginning balance. And once again, we're going to show the cash receipts to get total cash available. We take a look at our cash disbursements to get our excess of $37,900. That is the amount of cash we expect to have available at the end of the accounting period. So now notice that for your manufacturing overhead costs, look at some of those items. If you look at that budget, what they showed us was expenses such as depreciation. Well, depreciation is a non-cash expense. So when doing our cash budget, any non-cash expense items are subtracted from our disbursements to see the actual amount of cash we expect to spend for those type of operating expenses. So again, if you go back to your overhead budget, which did include depreciation as a fixed cost, you'll see now that those amounts have been subtracted because once again, depreciation is a non-cash expense, and we're looking at cash inflows and cash outflows on our cash budget. Okay? So after the cash budget, our last step is prepare a budgeted balance sheet. So here's some other information that's coming from our 2016 balance sheet. It gives our building equipment values, common stock, cumulative depreciation, our retained earnings. So this is information coming from the end of our last fiscal year. So now we're going to look at our balance sheet. Again, it's a budgeted balance sheet. This is the cash coming from our cash budget. This shows the amount of receivables we expect to have. This shows the finished good inventory coming from our production budget, material inventory from our material budget. This is showing our PP&E, less cumulative depreciation. And so this is showing us what our budgeted balance sheet will look like at the end of the accounting period as a culmination of all of our master budgets for sales, production, material, overhead. We look at our sale and admin expense budget, our budget income statement, our projected cash budget, and the end result would be our budgeted balance sheet. So what we've done for the entire year, we have forecasted sales, expenses, income statement, probability, all of that has been done at the beginning of our fiscal year. What we're going to do next, not part of this chapter, we'll compare budgeted against actual, and we'll then make any required adjustments as necessary. So this is actually our last chapter for the semester. I hope you enjoyed this chapter on budgets and the other chapter as well. And let's get prepared for a good week going into our final exam week.